हो गया नील।
मैं स्टार्ट कर रहा हूँ, आएगा तो तुम लोग देखो। Greetings to all. This is Neel Parekh, a technical research associate at GEPL Capitals. Welcome to this weekly market outlook video. In this video, we are going to talk about the Nifty, Bank Nifty, and current market chart structures, as well as we'll discuss the sectors performing well in the current market volatile scenario, and two stocks in the bonus point we'll discuss for the outperformance for the upcoming sessions. So, without any further ado, let's start with the video. So this is the weekly scale of the Nifty time frame, Nifty charts, and if you look at the overall price structure, seems to be on the higher lows formation since the bottom out of on the August series. And if you look at in the from the August series, the October series has been witnessing a prominent bullish structure, and despite that, it has been showcasing a higher trend above its 12-week exponential moving average. So during the current volatility, index is managed to sustain above its even the 12-week exponential average that defines the prominent upward trend on the higher structure. Zooming out on the daily scale, it's maintaining high top, high bottom formation with a statistical price behavior pattern, which showcase that every bottom has been consistently bottom out at the level of 3% price correction. And recently, the 2 to 5%, 2 to 3% correction has been completed on the Nifty 50, and interestingly, it has been made at the bounce of 50-day exponential moving average. Similar to that, we have observed on the November series, the November bottom was made at the 3% price-wise correction, and that too on the 50-day exponential average. So two similar price pattern has been followed on the Nifty index as of at the moment of the current market scenario. So if you look at the current day, which is the Friday trading session, it is opened on the gap up note with the surpassing the prior 3-day high range. That denotes the early sign of the positive strength on the index. Now going forward, the immediate resistance for the index would be at 26,218. So this particular level is being concentrated as it's the highest closing level of 1 year back, which is on September 2024. So during the December month, we have witnessed the new all-time high at the level of 26,325, but we have not even attempted to close above the level of 26,218, which is the highest closing of 1 year series. So we are witnessing a continuation of the prolonged consolidation phase. Till then, we are not getting breached on the closing basis above these levels. So actionable setup for the Nifty index would be buy at the current market price or above the level of 26,100 for the target price of 26,250 and 26,350 level. And in this case, we have to maintain the stop loss at 25,950 mark. The momentum indicators on the lower panel has also been indicating a early sign of the recovery, but still we have to wait for the confirmation about 26,200. Now, zooming out on the Bank Nifty has been consistently witnessing the leadership in the current market scenario, maintaining high top, high bottom formation. Similar price theory has been applied on the Bank Nifty as well. During the bottom out formation, it has been bottom outing at the level of 2% price wise correction. Recently, the 2% price wise correction has been completed and it's been holding the 20-day exponential moving average as well. So the current week we have witnessed the Nifty has been witnessing a quite a bit volatile trading session, but the Bank Nifty has been witnessing the range bound toward the level of 59,600 and at the top and at the bottom at 58,750 mark. So that represents the clear-cut outperformance on the Bank Nifty compared to the broader indices. So despite both Bank Nifty and Nifty is at the near to its all-time high, but the broader markets are telling the different story as the mid and small cap index are facing the heat at the higher levels. Every elevated levels is getting profit booking at the both Nifty as well, Nifty Bank Nifty and as well as the mid cap small cap index. So if you look at the Nifty small cap index, it's been down above its 200-day exponential moving average and even the 50-day exponential average. So small cap index seems to be facing the major heat. So the risk conservative trader are should be avoid this particular index as small cap index and focus on large cap and mid cap indexes. Now zooming out to the favorable sectors to watch out for the upcoming session would be Nifty Auto. Yeah, so this is the Nifty auto chart. So weekly scale I have been mentioned over here. So Nifty auto has been formed a saucer pattern on weekly as well as on the monthly scale that represents the breakout above the level of 27,950 mark would witness the continuation of its primary upward trend. But on the daily scale, if we look at, it's also maintaining a series of high bottom formation and it's been getting bottom out at the 5% corrective phase. And recently the 5% correction has been completed and index is been ready to continue its primary upward trend. So from this pack, we have shortlisted one stock which has been Ashok Leyland. On the weekly scale, Ashok Leyland has been forming high top, high bottom formation, and the current weekly scale in stock has been witnessed the breakout of its rising channel, which has been adjoined from 2021, and recently it's also been showcasing a continuation on above its 12, 20, and 50-day exponential moving average, which is the clear strength of bullish structure. Current market price is at 163.84. We can set a target at 175 and 185 at a higher scale with the stop loss to maintain at 156 level for the effective risk management. Second sector that we have shortlisted for the positive momentum is the metal index. So metal index is been currently the rock star of the current market scenario, backed by the dollar weakness and as well as the commodity strengthening. So in commodities, if we look at silver, gold, copper, zinc, aluminium, platinum, all the commodities are in the getting buying interest and it's been on the upward cycle. So this has been getting benefited to the metal index. Weekly scale of metal index, it's also maintaining high top, high bottom formation as well as it's been sustaining above its 12-day and 12-week exponential moving average as well. The momentum indicator RSI on the weekly scale on the metal index has been prolonged above its 60 level that represents the sustainability of the momentum. The daily scale on today's trading session has witnessed the breakout of its falling channel, which has been adjoined from the October series. So collectively, this indicates the metal index it's set to rally toward the level of 11,200 to 11,800. From this pack, we have shortlisted the stock as Hind Copper for the continuation of the outperformance. So on the weekly scale of Hind Copper, we are witnessing the breakout of its flag and pole pattern, and it's been showcasing a continuation of its heart of high bottom formation. And the momentum indicator is at the 70 mark that represents the strong momentum is being persistent. And even this current market scenario where the broader indices are getting weakness and the benchmark indexes like Nifty index is been getting consolidation phase, the stock is able to outperform all the themes and the indexes and trading at the higher level. Current market prices is at 383. We can set a target at 420 with a stop loss to maintain at the level of 365 level. So that's it from my side. Thank you. Hope you like the video. Do share and subscribe to GEPL Capital's YouTube channel.